What's up, everyone? How you doing? 1K. How's everybody doing tonight? We all have a good weekend. Oh, good man. Love to hear it. Scott Ghosty in my DMs telling me to buy GME. Doing good, Tony. Thanks. We'll just give it a few more minutes, see if some people want to show up. Uh, who knows? Put in a huge run. Won't be surprised to see it push again, but everybody knows I've preached for years that things sell after split. So we'll see if we get a nice little sell after the split. I wouldn't be mad. But thing keeps putting up gigantic numbers that nobody can argue with. And like as long as they keep beating those like ridiculous price targets and like we got all the big money people putting out ridiculous price targets, and then we have them putting up really overall pretty ridiculous nice toasty levels, really pretty ridiculous guidance and all of that going forward, and then they keep on meeting it. It's definitely not where you really want to be short, we'll say that. Not to say some technical shorts can't work, but man, the thing's a beast that I wouldn't really recommend jumping in front of. Yeah, I mean, you can buy shares here if you want, if you plan on holding them for a long time. But I mean, I would personally give it a couple of months after that split and see if we can get some sort of substantial dip on it down. It is important to remember that liquidity is about to go through the roof on that thing. So I would start expecting Nvidia to move more like, Apple speed, some $1 and $2 days here and there. But when you all of a sudden have 10 times the shares, it becomes much more difficult to move that thing around. So, but who knows, man? It's Nvidia. It's got a mind of its own lately. But what is that split? I mean, is that like this Friday? Probably, I guess. Insane. Those old levels, those hurt. Yeah, they're saying on the 10th. Oh man, clobbered T. The original entry was pretty ridiculous, but then last week we said buy them dips down to 1720, 1710. I did. I got this. I got a lot of this. I didn't get that, unfortunately. Those were like that move on Friday. Those things were insane. I mean, everything paid really good on Friday. You could have checked a dart and made good money Friday. But man, when the market was still dying, those T contracts were up like 500%, 600%, something. Yeah, you don't see moves like that on T. Like, look at even that volume on it, I mean, that's like It's a pretty one of a kind tea candle. Looks like we had a little capitulation. Oh yeah, that was the one we bought. I bought calls like right here. Maybe like right here. Okay, just gotta do one quick thing. Okay, welcome everyone. How are we all doing? Dirty River, thanks for being here. Joe had some things come up tonight and wasn't able to make it. So covering the weekly market scan. I got a few things I'm watching. They're the same things I always watch. I'm sure they're the same things most people watching here. So we're going to talk about them. We're going to talk a little bit about SPY, but then this week, I also, and I don't know, I know that Joe will do this on occasion as well, but I kind of want to just touch on some things that are happening in the market. And then we're going to start with, specifically, we're going to start with just news this week. For anybody who doesn't know, super news packed week ahead. The market, even though we've had some very large days, no denying that on SPY and QQQ both, we've had some big moves. The market's been pretty well stuck in a range, going on, I mean, 3 trading weeks, 15 days of trading. We've basically been stuck in a $10 range, a couple attempted breaks outside of it, but nothing that was sticking, but, up, and then we didn't quite, we got a little tick down, but not much down. And so I'm hopeful, and we'll see if this is the week where we finally get something to break us out of that range. And I guess we might as well, although I do love that T chart, might as well get a oh yep, always got joke charts going. So might as well get this chart going here. So basically the thing that I was looking at was, we had previous consolidation over here, we had previous consolidation here. So how I've really been viewing this range for us has basically just been something like this, because that was where we really did, we kind of trickled up, hit some resistance here. So this is kind of the range that I've personally been looking at, all the way down to the 520, 519, 518 area, and then pushing back to, these are obviously all-time highs. These were previous all-time highs that we fought to hold, gave them up, and then now we technically did have a close back over those previous all-time highs. Granted, these are all-time highs from what, 2 months ago. This was March, middle of March. So we were able to get back over that. However, to me, even with these, big sell days, big up days, we've had some gap downs, we've had some gap ups, we've had a little bit of everything, plenty tradable. But I'm hoping with this coming week, we're actually going to be able to, hopefully get out of this range. I don't, I could care less if it's up or down, whatever it may be. I do know that long trade is gradually getting less and less appealing, but I stay, me, I mean, I stay buying that dip always. I even saw Tilio will pull it up because I've mentioned it a lot. Tilio's mentioned it a lot. This is the 5 and 13 EMA combo, and it's something that both me and Tilio, Lambos, I don't know if he's in here, he watches the 813. A lot of people watch that one these days. We've been watching this combo for months and saying, buy those dips all the way down to the 13 EMA. Obviously, if we give it up, you can look to be shorting. I had even mentioned a little bit that after giving up that gap, giving up those EMAs, I might be looking to short bounces for a couple of days. But overall, market range bound, held that 520 right where we'd want. Another thing that I was actually talking a little bit with Rev, it ended up being a one-sided conversation, but talking a little bit with Rev, we're at this interesting place where we got 520. We have 5,200 on SPX. which is, where I was really looking to buy the dip on Friday. And then also if we pull up ES, we're also sitting right, around these 5200s. And then obviously they bought us all the way up to this 5300 that we're now breaking above. But we have all of these things. So, some people, a couple of us were hitting some calls pretty early on Friday, and I got a lot of questions about why are you doing that? And my whole reason was this, hey, we're selling down to 5200 on ES. We're selling down to this 5200 on SPX. And then on SPY, we're just kind of coming down to the bottom of that range. And so as as all of I love trading ranges. I love, trying to like buy those bounces at lows and short those pops at highs. It's, a type of trading that I really like to do. And so that's why, unfortunately we were a little bit early on them in my tab. But that's why I was looking to buy the dip on Friday. To me, we were just really looking like we were coming into some levels where you would want to buy it. And then something that I'll always use as confirmation as well is things that Tilio says. We had a longtime member, and I mentioned to him on TradeFloor, I was like, bro, are you reading Tilio's newsletters? Because he was saying things that were directly against things that Tilio says in his newsletter. And in my opinion, every single person should be reading Tilio's newsletters always. They're packed with information. I even had a talk with Tilio this weekend and said, if people just went through your letters and the newsletters that you send out every Sunday and marked those levels, then you can make some really, really actionable trades just off of that. I mean, you got to do a little bit of price action reading, but they have all of the information you could want. And so, I not only had all those 5200 levels that I was watching, but then one of the really major ones that Tilio had his eye on was 5198, which, I mean, that's very specific. It ended up, I mean, we can even look at it. It ended up being, classic Tilio style. What do we get down to? 5191. He had 5198, so he was off by 50 cents, 60 cents, or I guess $5 or $6 on SPX, but not very much. So when you have all of that confirmation and then you get to even add a little bit of Tilio confirmation on there, that tends to, you should be able to say to yourself that you're definitely looking in the right direction. The other thing to think about is when you are coming to all of those major areas, I always like to use trader sentiment to my advantage if I can. And so, these kind of go back to those things of, while they are jokes, they can also be wildly successful. Things like inverse trade floor. And, we're coming down to 5200 on all the major indexes, coming down to that, big major support at the bottom of the range on SPY. And that was about the time that everybody started, wanting to be short. And even if we can pull up this SPY chart, and no denying we were taking a very strong sell after a nice gap up, but we're coming down to the bottom of our range. We're coming down to those 5200 areas. And then the main thing that I really noticed, I did try the initial longs right around here, just because that was the bottom of the range. And then, as most of you know, I always listen to Al Brooks if I can. This is a very, very classic signal bar. It's again something that I kind of touched on in Trade Floor today. And it was the first candle of the day where if we, and I think if you don't use volume, you're doing it wrong. But if we come down here and we analyze the volume, all of a sudden, after big selling all day long, this is basically our strongest buy candle of the day. We had nice high volume on it, 600,000 volume, which was higher than a lot of the previous candles we've had. We had 550,000 buyers to 20,000 sellers at the bottom of a strong trend. These are the types of candles where you want to start looking to maybe buy that dip. This is the market giving you a hint that it wants to try. One that I got faked out on, obviously I saw this one. I kind of waited to see how we were going to play. Saw the reducing volume on the breakdown. To me, that was kind of a sign to maybe try to get long there. Obviously, we were early on that, and me, I'm anti-early. And then really the only other really strong buying candle, full buyers, was this one early in the day, obviously met with strong selling. So when people were starting to look short, at the lows, we were starting to look long just based on all of those things. Well, now we get to come to this week. Back to the daily time frame, still in this range. big data all week long. Every day this week we have some data that I think will move the market. I'm not going to remember exactly which ones come out pre-market, which come out after the market, but I did kind of want to touch on some of them. We'll go relatively quick to try to get into charting after this. But I also want to try to answer some questions. Obviously, we aren't going to get super detailed on, who are these people calling, what exactly is this data, and how do they find it? We merely want to talk about, surface stuff of, what are these datas and what can we gather from them? So the first one we got on Monday, going to be the ISM PMI. And that tells us at the manufacturing level, how are manufacturers doing? And what that does is kind of give us a view into the economy. And it gives us an early view, because this isn't coming down to, this isn't the consumer stuff. This is before it even gets to the consumers. How are those people feeling? The manufacturers, the ones making the items for the consumers. And so you'll see the numbers on there, 40s, 50s, 60s, whatever it is. We really want to be in a healthy economy, things like that. We want to be above 40. That's going to be, manufacturing is expanding. The economy is strong. The economy is resilient. Those things that we hear from the Fed over and over. The manufacturers feeling comfortable to manufacture things enough to, kind of show some expansion in the market is a good thing. However, we don't want to see it really going up, because the Fed wants spending to slow down. That's what they want from the consumer. That's what they want from the manufacturers. They want less people spending money. We were able to see some of that finally in last week's GDP report, where we saw not only government spending down, we saw personal spending down, and we saw consumer savings up. All of that is, that is why the GDP was down, but those are all, to an extent, things that the Fed wants to see. So going into that, we really want to see what the manufacturers are doing. I imagine we will see a nice move off that. We'll see if any of this after hours move today holds, but we'll see what happens there. Next up on Tuesday, I believe we have, and some of these days could be wrong, but on Tuesday we have JOLTS, which is job opening and turnover for anybody that doesn't know. And basically what that tells us is, are there new job openings? Are we hiring people? Are more people being fired than hired right now? It isn't necessarily, jobless claims or anything like that. It's just telling us, how are businesses doing? Are more people being fired? Are more jobs being created? Things like that. That's what we get from the JOLTS data. Again, this is pretty crucial data. The Fed wants people working, but they want people not spending. So serious double-edged sword going on there. Wednesday, we then go into the purchasers PMI, the services PMI, things like that. And so what that is those people's really distributing from the manufacturers and giving these services to people, the supply managers, things like that. It goes through, that data comes from less businesses, but bigger businesses. And they just tell us, how are the purchasing managers doing? The people who are buying and selling things, are they making money? Are they losing money? Are they buying up items to sell, saying that, the market and the economy are still in expansion mode? Are things slowing down? That's what we want to look for in PMI. And, that one can be a pretty substantial mover, but it's one that can be frequently met with overreaction. Maybe we sell hard and they buy us up flat on the day. So barring any really crazy numbers out of that one, I think that is where, I don't think that one will give us quite as wild of a move. Hopefully we get some volatility from it, but we will see. Thursday, though, that is jobless claims. That is where we actually find out, are more or less people unemployed? Are more people filing for unemployment and those types of benefits? And so as weird as it is, we don't necessarily want to see that number skyrocketing, but we still do want to see a slightly higher jobless claim, or at least, holding steady from some of the previous months that we've had. That is, at least in my opinion, still one of those things that bad news is, oddly enough, still good news in that sector. And then Friday is non-farm payroll. And a lot of people just call this non-farm payroll week because we have a bunch of buying and selling and employment numbers come during the non-farm payroll week. And what non-farm payroll is, it just kind of evaluates how many jobs have been lost, how many jobs have been gained. This includes, private sector government jobs. It just obviously includes the non-farming jobs. And so it's a really, really important piece of employment data that, we get every month. And as again, the Fed is pretty hyper focused on things like employment and how resilient can the economy remain. And so again, big week ahead. We have had range bound trading. What range bound trading can give us is some very volatile ups and downs. But my hope is once we have this out of the way, we'll kind of be in either, I'm hoping for some attempted breakouts up or down. I don't care which comes, I'll trade whatever comes. Hoping for some attempted breakouts either back towards new all-time highs or maybe a breakdown again to under those previous all-time highs that we discussed from just a little bit ago. And then obviously whenever the next FOMC meeting is, all eyes will be on that. And that will be, after getting PCE, CPI, GDP, and then all of the employment data. That's when all eyes again start looking forward to that FOMC meeting. So with that, probably babbled on a little bit too long, but I figured, discussing the news that is coming in the coming week should be in everybody's thought process. As we go into some of these trades that we're going to start talking now, be aware of news weeks. If you don't like volatility, if you don't know how to size during volatility, this is a week to definitely take it a little bit easy. It's those types where you don't need a bunch of contracts because the moves can be large. And sometimes you are happy you don't have a bunch of contracts because the moves can go against you. And the market has been making some pretty weird decisions, but Tilio and I talked after the data on Friday, early in the morning saying, so we get we get good data, we get softening data, we've had overall good data on the week, and they clobbered us early. I mean, I don't remember what that early sell was, but I mean, got $6 down or something just to buy us up $10, but they really clobbered us on some relatively good data. So we will see what happens going forward this week. Again, really no telling for us for now. But if you are trading this week, maybe size down, maybe really step back on those swings. If you do plan on swinging, don't want to, you don't want to get blown out by data. We all take trades that are wrong, like whether we're early or we're late or whatever it is, everybody gets stops out of a trade. But really just be careful swinging on weeks like this because, your trade plan can be perfect. And then, your trade plan can be perfect, but data can ruin it. So just be prepared for that this week. And so with that, we're going to get into a little bit of charting. I only got 4 things I want to talk about this week. And so hopefully we should have, plenty of time to get through a couple of charts for all of you tonight. But real quick before we do that, any questions? I know I kind of went quick on all of the data stuff, but any questions on any of that without getting too technical? I'm happy to answer them. Oh, where do I see it, man? I always just Google it, or honestly, Casey does a great job of getting it posted in the news tab. I mean, it's normally there, it's there promptly when she's around. So I typically just go to Google or news tab, and it will have the answers for you very quickly. One that I will do sometimes if you type, one thing I'll do is I'll Google Market Watch economic calendar, and that tends to be updated relatively quickly, and you can see, what those numbers came in at if you're looking for them. Okay, well, with that, we will get to some charting here. No questions. Hopefully that means I explained it really good, and now that I explained it so bad, nobody cares. But first one we're talking, Apple. We're just starting with a blank chart here. Again, we're going to kind of be building off, the lectures that I've been talking about, the lectures that we've had recently, some of the ideas that I have trading. So obviously bunch of support and resistance. We want to figure out where those levels are around us. I'm charting these quickly tonight, just because we've covered it in class, so I don't think I really need to beat on that one. So main level that I'm watching, as we said last week, when we had class last week, we had seen this big sell. I said we get back over 190. That's where you really want to be trying to stay long on Apple, in my opinion. Any of these dips down to 190, definitely worth buying. However, the next one that I'm still watching for, I don't know if a trend line is going to be the best way to display this, but the next thing that I'm watching for is really this crack over 192 or 193 rather. If we can get above this, that's where I think we'll kind of get this steam to. Hopefully, I doubt it happens in a day, but hopefully get this push back up to the 196. Not saying we're going back to the all-time highs or anything like that, but we are finally seeing some strength out of Apple, having those dip buyers show up on Apple. For me, with all these EMAs pointed upside, solidly holding that 190 for basically every day but one for the last 2.5 weeks. I want to, remain bullish on Apple here. As most of you know, when we come to trends like this, I short them, almost always. This is one of those times, and this is where I actually wanted to talk about it, is just we're seeing, some nice increasing volume on Apple. We're seeing a push up into this trend line. We are still seeing plenty of selling pressure on it in the last few days, but that was market wide. Well, no, that wasn't market wide. That was tech wide, I should say. And so we're still seeing that selling pressure, but I just don't necessarily want to try the short here. I would rather look for any sort of break to the upside. If you're scalping, I see a question on here about, time frames, what time frames to watch. If you're scalping, you can really watch for any breaks of this trend with pullbacks to it to act as your entry. And you can do that on the 5-minute, the 15-minute, whatever it may be. If you're more looking for that breakout swing trade on it, while you might miss the trade, which is fine, I'm going to feel much more comfortable paying the premium, seeing the daily close above that trend. I still want to see, and I'm not going to say we're going to get this super high volume last day of the month sort of thing going on, another candle like this one. But I want to see a break above, daily close above, some volume to back it up, maybe a retest down to the 193 area for an ideal entry, but I want to see strength over it if I'm looking for a longer term swing trade or whatever it may be. Again, you can look for the short, but just with how the buying has been on this, with these EMAs on here, with the big buyback, I think they had a buyback coming. You want to look long on this, in my opinion. Again, still range bound. You can try that short at the top of the range, but for me, it's just not personally what I'm looking for on Apple. I think they gave us some good numbers, good enough numbers, increasing that dividend, doing a bunch of things where obviously buyers have showed up. They're seeing that interest in Apple. It went from 5 months, give or take, of selling on this thing, and it took 2 earnings reports. And this one was even a pretty dang decent earnings report as well. But it took 2 earnings reports to finally say, hey, look, we're interested in purchasing Apple again. And it went from one of the weaker tech names, big tech names, to one of the stronger big tech names. And so for me, I would still want to be, looking for that continued upside on it. Obviously, I'm personally not going to be buying, I'm not going to be taking any entries before 193 breaks, but I will take an entry down to this 191 or 190 area if we get that dip back down to there. I like that for the bounce, targeting back to that trend. And then for me, if I'm getting in around 190 on a pullback, I'm likely going to be using personally this 13 EMA as my stop out. It's going to be about $1 below us, depending when we get back down there. And if we're getting any sort of daily close below that EMA, or just seeing heavy selling below it, that's when I'll look to exit the trade. But for me, I would rather look to play either the breakout if it comes or the dip buy, kind of in this range. Easy trade is what I'm looking for on that. So that's what I'm seeing on Apple. Anybody seeing anything different? Or if you like that, we can move on to the next. I just like Apple right now for a nice, simple trade, in my opinion. Okay, looking good, love it. Next one we're going to talk about, because we got to talk about it because it's the best stock ever. AT&T. We've been hammering this one from the last few classes. This was one of our original dip buys on it. Then last week when we were, I wonder if I probably didn't. Oh, this could be it. This right here, we were looking for when we were talking up here last week. We were looking for any sort of dip down to this 20 daily moving average with a stop out here. And so that's actually what I did. I ended up buying the dip on this way down. Ended up catching this nice bounce fully out. Did not get to catch this move, unfortunately, but extremely nice move on AT&T. I was unable to find any real news to back that move up. As I was saying, kind of at the beginning of class, you know, I like that's an extremely rare candle for AT&T. It is very, very uncommon for it to put in, I mean, a move like this in a single day is pretty, that's not common. And to have 2 days in a row where this thing's pushing up over $1, I mean, that's a huge move on AT&T. That's something to really take note of. However, we got bought up to basically, our final target. So now we're at a very interesting area. And as much as I hate to say this on AT&T because I think it's the best stock ever, we're coming into strong resistance. We had this level here, and when we were even discussing it, over the last, month and a half or whatever it's been, we were saying, this is going to be hard to get over this 18-17 area. And so because of this, as much as I hate to say it, I would feel a lot more comfortable shorting T on a break back below this 817, looking for a retest of this 18-17-88 area. Maybe it keeps pushing. I do feel like, there had to be some news or something that I just missed and I didn't look hard. I just love seeing AT&T rip, but I would personally feel a bit more comfortable on this break back below. And then again, if we really do start selling, this trend is where I'm really going to be looking to buy the dip again on T. Of course, big picture, you can try to buy the 1788 if you want, stops below it if we pull back to there. But for me, and this is one where I could end up being just dead wrong on it. When I see all of this junk overhead, we got like, if you really start putting levels, and this is a weekly chart, there's going to be there's all of this. Now we'll even go to a slightly longer. Going to be all of this. We missed that one on the big picture. And right there. So we have a nice little, again, if we come back into our daily, we have this overhead, which makes it hard to move up. When we have less levels like this, where we don't have 3 within 20 cents or 18 cents, whatever it is, or we have them, every 20 cents, 30 cents, whatever it may be, it gets a lot more tradable. When you have a big breakout heading into this, in my experience, it's better to try to look for the short below here. So that's what I'll be looking for on T. But if we do look like we're going to push, I'm not opposed to buying the dip back down to these previous highs and trying, if we're looking like we're just going to wick it and bounce it, that's a fine trade. But for me, T likes to get exhausted, and this looks like an exhausting move for T. So I think it is definitely a place to really tread a little bit lightly on it personally. If you're looking for that long trade, obviously, if you've held this whole trade, when we were originally talking about it, we were in 17 calls with those end of June expirations. You're up giant. So, don't be rushing into longs after a move like this. Definitely something that I really, I trade T a lot. Hate to say short it, but breaks below 18, I think are going to be a pretty dang nice place to short it. So next one I'm looking at, boomer stock. We got 2 more boomer stocks after this. Obviously, this is something you're noticing. I'm pulling these up and you're noticing all of these names are putting up really nice moves. And if you remember what SPY was doing while these nice moves are getting put up, that's why I have my eyes on these kinds of stocks right now. We saw what, both I've talked about and Tilly has talked about of just seeing that breadth expansion into the market. And when we say that, what do we mean? It means people are buying something besides Apple, Amazon, Nvidia, Microsoft. They're buying other names. So when we've seen, QQQ putting in, hasn't been putting in great moves, and then we're seeing these big up candles on names that normally don't put in big candles. That's when I really start watching them. And so on Coca-Cola, again, late to this, but that breakout was there. This getting above and holding 60 has really, like, we've seen it here. It was a battle. I mean, up and down for the better part of 3 months. Finally got that breakout with this really nice retest to those previous highs. Now, as I said, we're late to this trade, but it's something that I want to keep my eyes on because now we really have that confirmation that we do want to hold over 60. So this one is kind of another trade. Again, it's going to be a tricky one to catch, in my opinion, long because we are late. But where I would be looking to catch it long or short is basically the same area. So we can see this is our little bit of consolidation we had. These were kind of the previous highs. That's really, you could say it starts there. But we had this nice consolidation here that after the big breakout that was ultimately met with selling. So this kind of 62.90, 63 area for me is sort of my line in the sand. I would like to, if we break and we hold and we're kind of consolidating in the bottom of this range around that 63, then I'll likely be looking to try to get some calls to run it back up to these previous highs, 63, 70, 64 area. And the trade might work, but as I said, it's a bit of a chase after a move like this on Coca-Cola. So the other side of it that I do like is going to be involving this wick in this range. We start selling below that 62.83. I'm going to be looking for some shorts down 62.50, 62 area, maybe even all the way down to this trend test. As maybe the market's setting a more major lower high. If we do get the push back up, I will obviously be trying to short the double top without a question. But I think we're in this nice little, basically, 62.80 up to 63.10 area can be traded either way. If we're showing strength, continue to follow that strength. If we do start to falter, maybe money starts going back into tech, like we did see a nice shuffle into tech end of day on Friday. If we see that money going back into tech, you can kind of look for some of these names to weaken up again, unless Reddit stays strong and we really do expand, but really, really nice area on Coca-Cola. They have nice cheap contracts, friendly movers. You can buy plenty of time to catch the move if you want to catch the whole move. Or sometimes you can catch these nice volatile, $1.50, move days on Coca-Cola that pay really, really well. And so simple trade on Coca-Cola. As I said, I guess I should put this lower level on here just to really set it in stone, really anything up to this upper end 63, 63.12, that's holding in that zone. That's where I'll be looking to get long. Break below this 62.84 previous high, even kind of both of these wicks. I'll be looking to short it, and then I will leave my trend, but I will start to view the trend a little bit different and treat this one as the more major lower high from these previous highs. So kind of got to wait and see what happens. You can leave the trend here if you want to kind of trade around it. But I'd be watching that 62.80 up to about 63.10 area. Let's see. Oh yeah, answer the time things. Oh yep, we did weekly on the T1K. Oh, Dominic, we just checked Coca-Cola. Love to see it. Well, we're getting requests. I got one more to show though. It's another one that unfortunately might be a little bit late. Disney played exactly like we wanted from our class last week. Again, we're just going to kind of set this up how it was. Obviously, gap fills all the way down to here. We weren't quite getting down there, but we had this major level right here. 100. When we were talking about Disney last week, we were basically praying for a pullback. I even said, most people know I was talking about it on trade floor. I missed it. I was being greedy. I wanted the whole gap fill all the way down to the bottom. Did not quite get it. However, we now have some nice little levels to play. We held the bottom of the range. We held that 100 level. There's no reason whatsoever to be looking short down here. We've now put in this really nice bounce. So this one has some nice simple support and resistance to trader. Obviously broke this 102 high. Next highs we're going to be looking for is this little consolidation. Next major highs, kind of the top of that range or big red candle. And then we work the bottoms as well. Any of these major lows that we have, those want to be on the chart too. So, and then we're going to put this on here. Doesn't matter because it's been missed now. But here's our nice trend. Obviously, strong trend break, big volume, big buying volume on that. Where I'm looking to get long is a break of this 104.50 area. We're going to miss some of the move, but break of this 104.50 area, I got to believe it wants to try to push back up to the top of this zone. I'm not saying we get the breakout. I'm not saying we go for any of this gap fill, but I like this trade. Got EMAs curling up for us. I'm just running the 5 and 13s tonight. You should always check, might as well. Oh yeah, see, this one's even gonna tick down for us. Break of this 104.40, break of this daily 20 SMA. I like that for a long, easy one to see push up. And then on the other side of it, we stay below there. We look like we're faltering. We know that's a pretty strong little zone. You can look for another short back down towards 100. I like when we have these setups like this on these slow moving names. As most of you know, I don't love trading in the middle of ranges, but when we'd have these just like basic stair steps, obvious trends, nice upticks in volume, we can start to look for some of those trades, especially on these slower movers. I mean, if you're holding Disney contracts for $1 move against you, you need to work on your plan. You can typically have a 20-25 cent stop at most on these things. So plan accordingly, trade accordingly. Don't let these things just get obliterated just because they're cheap or anything like that. Look for this nice breakover and you'll probably be happy on a nice push up to 106 or whatever it may be. Or if we're staying below, looking like we're faltering, look for that move back down towards 100. Obviously, we can see here, don't get greedy. We see 120, start trimming those things. I missed this trade because I wanted the fake break under 100 to get long. That was my hope. Didn't get it, but Disney putting in a real nice look right now. After getting pretty dang beat up, selling, gosh, 20% plus off of those highs. Worth it to keep your eyes on this thing, in my opinion. So let's see, any questions? Dominic, we got that Coca-Cola. Hood, yeah, we can actually check out Hood. Yep, shop. We can do shop as well. Nice what time we got. Nice. We got about 20 minutes left. Disney at 100 is a bargain. I completely agree. And this was another one of using awesome, using that sentiment in our favor was there was so many people talking about, oh, easy short down here, oh, setting up a bear flag, whatever it is. And that's, this is a prime reason why I don't trade patterns. I don't trade any of that stuff. I mean, everybody just assumed that this little flag right here is going to do what these little flags or whatever you want to call them did, and break down, but they're ignoring the Disney is at 100. And so to me, that's why I avoid all that kind of stuff personally. Okay, so David up first, Hood. Let's see what we got. Ooh, big reject. Nice double bottom there. Let's look at this little bigger picture. I know it's super ugly, but man, crucial level, huh? Crucial zone right there. I want to have this previous high on here. Big reject there, but basically just sold straight to the trend. Always want to be conscious of these too, because that probably would have saved you on upside for the chase. I mean, for continued upside, as we saw from that long-term weekly chart, if we go way back here, this is what we're looking at here. I mean, this was, Hood got clobbered, and when it gave up that 22 area, I mean, it proceeded to shed 50% of its value in 2 months. I mean, this thing had a really rough start to life. Had the degens on it heavy. pretty ugly weekly candle there too. But for me, as I'm looking at this, any of these dips down to this 20 area, even this 2060 area, you can start to look to get long. But watch this trend. If we're looking like we're going to give up this trend, hood's a volatile mover. Frequently first breakdowns or first breakouts fail, but if this hood does want to give up 20, want to give up this trend, you'll see a quick move back down to these SMAs. It's just kind of a resetting move. Obviously these previous highs over here, any breakdowns below there, that's where you want to be looking to get short. But for me, down to this 2060 previous highs area, I'm definitely a dip buyer on hood. And in all honesty, I like hood a lot long term. I think that it's just got absolutely obliterated for no reason. I won't say no reason, but little to no reason. And so I like hood long term. I'm not going to be rushing into long dated calls just because of where it sits, knowing that this is, pretty big inflection point. Like if we go back on the weekly, we basically have, at least in my opinion, we have two levels on the daily. When we break 22, we'll say, and really hold it, we basically have two levels to push us all the way up to this 2650 area. So that thing could get to absolutely flying if it is finally able to break out and make that move. But for me, I'm just not going to rush in just because of, anybody who has been holding shares since, let's see, that was the 22, 23, 24. Anybody who's been holding shares since December of 2021 is green. And so you got to believe that some people are going to want to be taking profits there after a very long, hard 3 years. So I tread pretty lightly on longs up here. But as I said, again, I'm still more longer term bullish on hood. And it's somewhere that I do think dips are worth buying. Next one, shop for iPhone. Well, obviously I haven't looked at shop in a while. Give me 1 second. Just teetering, huh? I mean, it's holding, technically speaking, where it needs to hold, but it's kind of getting to crunch time on that. I mean, if you are a dip buyer on shop, now's your time to shine, in my opinion. Let's see. Just gaps galore on this thing, huh? I mean, that's the trade I would love on shop. Break of that trend, break a 56, 55 area and catch that short quickly back to 50 and fill, obviously it might not get all the way there and quickly fill that gap. Not a trade to rush into. Big support, extremely major trend, going back 2 years ish, something like that. So this is the spot to be looking for that dip buy on shop and a push back up to 63.40 anywhere all the way back down to this trend, maybe down 50 all the way down to 56.29. Definitely would personally be in dip buying mode on shop. But has that big ugly gap down there. But also has, I mean, this behemoth of a gap right here too. That earnings move down was a rough one for it. So, I mean, catch this bounce up to here and then maybe look for that push at least to the 200 day. I'm not going to say it's going to fill this big old monster gap, but it breaks above these SMAs, anything there. I kind of like it. It's going to be a higher risk one, but dip by all the way down to 56.20. And then if we start getting into this gap, I would personally be out in a hurry because shop can do those insane, 5, 6, 8% days, and you don't want to be on the wrong side of them. Yeah, Disney at 100 is in fact a bargain, Nick. I saw that earlier, but I do still agree with that. Coin. Back into consolidation world. Yeah, I was leaning short on this thing last week. I was wrong for most of it. Well, I didn't realize just how clobbered it had got. So unfortunately, I mean, the entry for me short would have been back on into this range here. I think we kind of talked about that a little bit last week. Try to be short at the tops of these ranges. Obviously, you got blown out if you got in, which I mean, I would have got blown out too. So no problem there. You could, I mean, it's even got a little trend right here. It's given up. I'm not gonna be, I mean, and I'm not gonna say it's coin, it's Bitcoin, who knows what's gonna happen. Grizz is the way better person to ask on things like this, but I wouldn't be rushing into longs until a breakout up here, or retesting some of these lows, 208, 200 area. Obviously, I'm not gonna say coin's gonna shed another 10% after having what looks like about, a pretty big 4% day, whatever that is. Oh, 10% day. 10% day. Yeah, I'm not saying it's gonna have another 10% day, but not rushing into longs up here myself personally on coin. A little too much mess over here to really even love the long, but when Bitcoin gets to pushing, I think it's gonna put a nice, run back towards those highs, and I think it'll come. Flacco, nice to have you in here, man. HD, haven't traded this one in a long time either. Uh, It's just get all fresh. Daily time frame, obviously you want to have your eyes on these major highs. Where it just got absolutely torched. Ended up holding that last line of defense, huh? Got the lows down there, lows down there. Mm-hmm. You're kind of like this here almost. Big volume. Volume's just a little hard to analyze right now with how crazy everything was on Friday. But I do like this, potential lower low double bottom situation going on here. Not getting long right here in any way, shape, or form. I mean, you're running right up into the 200 and the 20 moving average. You got that 20 well below that 50. Trend is obviously strong down. However, we get this break above trend, above 200, above 20 day, or 200 moving average, obviously not price, but just to clarify, we get the break above that, this thing will make a quick push up there to that 50 for us. So has the opportunity to be a nice long, but you guys all know how I trade. I mean, I'm not going to be the first one in this trade. I'm undoubtedly gonna, if I was going to be in it, I'm paying that premium. I'm looking for a break of these major numbers and looking for the move from above the SMAs back to the top of this consolidation area, somewhere around here. So break out here, move through here. And I personally would not be looking for much more than that myself. You can also, with this 200 day right here, on the other side of it, risk the short. Short the 200 day. You are shorting some pretty nice strength, but still coming off of the back of extreme weakness, 25 buck drop or whatever. Short at the 200 day, stop above that 20 day moving average. You're gonna have a couple of bucks of risk on the trade. Let's see, you'd be around 335-ish to 337.50-ish, so 250 risk. Best case scenario, you're getting 10 bucks down. I mean, I'll take the one risk for reward trade every single time. I think you're obviously going to meet some stuff. You aren't just going to dump it, but can definitely risk that short with the trend and the 20 SMA right there. I actually like that though. HD tradable all around right now. Who is this one? Flacco, nice eye. Put a little alert right there. Yeah, Flacco, good. I mean, good eye on that one. That was a great one. Vinny, how we doing? Thanks for the DM on this one. We talked this one, didn't we? If I remember right, we talked this one. So yeah, Roku. Obviously a name I don't trade a lot. I know that actually 1K trades this one. And Vinny, when you mentioned this to me, basically the first thing I did was go to 1K and tell him, hey, look at Roku, It does have, obviously big picture on Roku. The thing looks horrible. But plenty tradable. And when it's in these nice little, like, I mean, this is like, this is a $10 range that is just basically handing out free money. So this is a trade that I actually really, really like. Roku contracts are relatively cheap to buy time. You got a little, resistances and supports here and there. But this dip buy down to 56 has been a print fest. Obviously, really any of these dips down to 56, 57 area have paid really nice. And then shorting as we push back here to these 62, 63 areas. Now we had one attempted blowout, didn't stick. But beautiful, beautiful chart right here for the trade. Am I long-term bullish on Roku or anything like that? Wow, that was actually nice. Absolutely not. They're competing with just people that are way better at what they do than what they do. So long-term bullish on Roku, probably not. However, loving the dip by down here at 56, anywhere that 56, 56.50 area. Stops if it's just gonna give up that range. God, that's probably, I guess I don't know for sure, but I gotta believe that 55 is potentially all-time lows. I don't know. What's the lowest? Oh, no, nope, it got worse at one point. But that's great. Dip buy all the way down to 56 area, stops below, below trend, wherever you want it. If it gets really ugly for whatever reason, you can hard stop at 55. You got no more than $1 risk on the trade and an absolute best case scenario probably won't happen, but if it did, it'd be really cool. You got $1 risk on the trade downside, looking for, let's see, $8 upside. Beautiful trade. Love that one, Vinny. Thanks for showing up and reminded me. I'm not sure if you normally come to my lectures. I don't remember what you said. But thanks for being here. And that's an awesome trade for any of you smaller port people or the people who like those slower movers. Roku on it right now. I think, like I said, really, really great trade. This was not one I found myself. This was thanks to Vinny in here. So love to see that. I see we got a few people trickling out. Just want to say thank you for being here. If you got to get out of here a little bit early, but we got about 5 more minutes. We can probably check out another chart or two if anybody wants some. If not, that's great too. We can call it a night. I do have one request, shoot me a DM or say it on Trade for whatever. If you liked me kind of covering some of the data that we have coming, the week ahead on this Sunday scan, it might be something that I'll try to, do more often, at least in my weekly lectures to try to talk about it. And we can do that going forward. And like I said, DM me Trade for whatever after hours if you liked it. If it's boring and nobody cares, then great. We won't talk about it anymore. But if so, we'll keep it going. And so thank you, everybody. I see a couple more CRM. Tricky one. I ain't touching it yet. Do I think that sell was like do I think that sell was justified? In no way, shape, or form. Do I think the sell was justified on CRM? Not. I'm not trading it. Right now I'm not trading it. When you got things that look like this, we know where support is. If we pull back to 210, you can look to get it. You can, try to risk those super long-term consolidation, or like long-term trade on it to go for that gap fill. Could happen. Could put in a huge run this week. Who knows? I don't trade things like when something drops 20% or whatever. I don't remember what the actual drop was. When you get a 20.6% drop on a stock, I just don't touch the thing for a couple of days. There's trades there to be had, volatility to be traded. But for me, we can't really make any judgments on this. We need to let the market decide what it wants to do with it. Smiley face, TNA. What a random. Do you trade this? The small cap stuff? It's great. Super range bound trader. I actually used to trade it some. We had a bunch of the people who did selling premium in here on it. I thought that was not very smart personally. But it can be a really great trader. They're small caps. It's just like IWM. They tend to live life in ranges. This is something, is because it's 3x leverage, because there's things like beta decay, there's rebalancing of it. It's not a long-term hold. that's why I was opposed to, people doing sell to open stuff on it. It's okay if you want to, it's rallying up and you want to, sell some puts, or it's dumping and you want to sell some calls, fine. But to me, it's not something you want to hold long term. You will lose money in the long run. I think it's a miracle this thing didn't. It was pushing reverse split territory through 2022. So I think we got lucky that it didn't. Or holders of it got lucky that it didn't. But very tradable, tends to stay very range bound. As I mean, we can see here, even if we go back, previous times, you can see the only things that have on it really marked are ranges. Buy these dips down to the 30s, short these rips all the way up to 40, 42. That has worked for 3 years now. So that's how you trade it. You can try to catch these trades in the middle of it. You can try to catch the breakout. I think that's a bad idea. You can try to catch the breakdown, unless you get a nice setup like this. I think that's a bad idea. But trade this range. Obviously no entry around here. You could risk it off the trend if you want, but I would wait till it pushes to an extreme and take those counter trades. It's worked, as I said, no exaggeration, going on 3 years now. You have been able to trade this range, for all of 2024, all of 2023, and the better part of 2022. So I guess, 2 full years, it has been working. Even before that, it was just range bound in that 80 to 100 range. I mean, this thing trades in a range, so trade it range bound. I think the time to look for this thing to really get running, I'm not going to say it's ever going to go back to this. It will eventually, likely, but back to those 80, 100 areas is rate cut time. We get a couple of rate cuts under our belt, and that's when these small caps will start to outperform, at least in my opinion. So when we start to see some rate cuts, we let the potential sell that will come with the first one get out of the way, maybe see a second one. That's when you want to start building into longer positions on TNA. But for now, trade it, in that range. And nice to see the people still watch it. VRT, you really coming in here dropping Norvin Jr. banker boy stocks? Look, this is where I told Norvin Jr. to buy it. Banger stock, river entry for gutter boy, right there. I don't know enough about this stock, to really give an awesome analysis on it, but I'm not jumping in front of it. The major trend it has going on is right here. We can see on this upside, we've had some trend short opportunities, but as a whole, big picture on this thing, trend is, oh yeah, target for gutter boy even. Trend is strong up. Like bears are demolished. I mean, and I just don't jump in front of things like that. This thing is up 809% since in 12 months. Yeah, I guess 13 months now. So I personally just don't jump in front of these things. I'm sure there is some technical shorts to be had down to here, but for me, I'm a dip buyer on this. That trend is up. I mean, and so I would stick to looking for dips to buy on it personally. But again, I don't know financials. I don't know fundamentals. I don't know any of that stuff. I just know that Norvin's been banging the drum on this thing forever, and it has been performing very well in the market's eyes. So I personally don't jump in front of it. Tesla, yeah. I mean, it's horrible. It's still, I mean, I don't know. I'm just not like, it is the only mega name that is still destroyed and nobody wants it. And like, to me, I'm not looking like long term or anything like that on Tesla. I mean, again, I see you can call it a pennant. I'll call it a couple of trend lines myself. That's just how I like to think about it. But for me, I mean, it's below 180, so I stick short, below it, like, if it can't break above 180, stay short on that thing. If it gives up this trend, this thing puts in awesome moves up and down. But any entry here, if you want a long, wait for that low 170s. If you want a short, wait for 180. If you want a longer term long, wait for the crack of that trend and the crack of 180. But it's always important to remember, big picture on Tesla, this thing doesn't look good. Like, it doesn't look good to me. That's a bad looking chart. That's definitely a chart that has had extremely high volume. I mean, well, like high volume selling, going on 2 years now. You know, it's just not where I know everybody loves Tesla, but it's not where I'd be putting my money. What's going on with GameStop? Pump and dump life, man. I mean, but we talked about this in class, and it's a pump and dump, so don't chart it. Like that charting these things is not the move, you know. But there's there's places you don't want to be short. Obviously, when on the 1750, this was the breakout area. So most people should have like little to no interest in being short here. Then when somebody asked me about this in my class last week, I said, like buy like, if you are gonna try to trade it technical, buy the dip to 20. And then now we got pump and dump guy making another tweet today. So I mean, I TOS ain't gonna show up, but last I saw that thing was at like 27 or something up here. So it was flying. But uh it's a pump and dump. That's all it is. If you catch it, more power to you, but always just be really careful. Do not get sucked into uh the trade floor nonsense, none of that. Just be careful with it. Have fun with it. Don't size huge, and if you catch the run, good for you. Happy for you. Okay, well, that's gonna do it. Right on, everybody. Thank you. Awesome lecture. Great turnout. Love it when we get over 50 of you guys. That, makes my night. Happy Joe let me cover. Happy we got to talk about a few things. And thank you all for being here. Yeah, thank you all. Thank you, Jose, Flacco, everybody, Vinny. Appreciate you. Yeah, thank you all. You guys are awesome. Thanks for being here. Okay, well, right on, everyone. Thank you so much. Have a great night, and we'll catch you all tomorrow.